In this video, I'm going to reveal exactly how to master the support and resistance, and also learn to avoid tricky fakeouts. So watch it till the end for bonus tips that can get massive profits on your trading. But first, be sure to leave a like in this video and subscribe to the channel. First up, what is support and resistance? Support and resistance are two basic concepts in technical analysis that help traders identify potential buying or selling opportunities. How to find the support in the trading chart. Support is like the floor for a stock's price. It's a level where the price tends to stop falling because buyers come in and start buying. This buying action prevents the price from dropping further. Look at this chart. See how the price bounces off this line multiple times? That's a strong support level. The price hits this level and goes back up because buyers see it as a good place to buy. How to find the resistance in the trading chart. Now let's talk about resistance. Resistance is the opposite of support. It's like a ceiling for the price. It's a level where the price tends to stop rising because sellers come in and start selling. This selling action prevents the price from going higher. Check out this example. The price struggles to break through this level and keeps getting pushed back down. That's a strong resistance level. Sellers see this as a good place to sell. So why are support and resistance important? They help you make better trading decisions. If the price is near support, it might be a good time to buy. If it's near resistance, it might be a good time to sell or avoid buying. Here are 6 very important concepts to keep in mind when drawing support and resistance. First one is, look for multiple touches. When you open a new trading chart, look for levels where the price has touched multiple times without breaking through. The more times the price bounces off a level, the stronger that support or resistance level is. Now let us talk about second concept. Using longer time frames. Support and resistance levels on higher time frames like daily or weekly charts tend to be more reliable. This is because they reflect more data and are less likely to be influenced by short-term market fluctuations. For example, a support level on a weekly chart is more significant than one on a 5-minute chart. Here is the third concept. Consider psychological levels. Round numbers like 100 or 1000 often act as strong support and resistance. These levels are significant because many traders place buy and sell orders at these round numbers. For example, if a stock is approaching $100, it might face resistance as many traders might sell at that level. Consider the fourth concept. Here we need to pay attention to volume. High trading volume near these levels can make them stronger. Volume shows how much of the stock is being traded. If a support or resistance level is accompanied by high volume, it means many traders agree on this price level, making it more significant. For instance, if a stock hits support at $50 with high volume, it means many traders are buying at that level. Let us discuss about fifth concept. Adjust for market conditions. Support and resistance can shift with changing market trends, so keep them updated. Market conditions like news events, earnings reports, or broader economic trends can change these levels. For example, a previous resistance level can become a new support level if the stock price breaks through and stays above it. Here is the bonus concept, which is the last and important sixth concept. By combining support and resistance concept with other indicators, it provides the best profits in trading. Using tools like moving averages or trend lines to confirm support and resistance levels. Combining these indicators can provide additional confirmation. For instance, if a support level aligns with a 200-day moving average, it becomes a stronger signal to buy. After learning all the previous concepts, now let us go and do some practice on charts. Now we're going to learn how to draw support and resistance levels step by step using TradingView. This is a crucial skill for making better trading decisions. Let's get started. First, if you haven't already, sign up for a free TradingView account. You can find the link to TradingView in the description below. Once you're signed in, open a new chart for the stock or asset you want to analyze. Now let's draw our support and resistance levels. Here are the steps. 1. Identify significant highs and lows. Look at your chart and identify the points where the price has repeatedly bounced off or turned around. These points are your potential support and resistance levels. For example, if you see the price dropping to a certain level multiple times and then going back up, that's a support level. If the price keeps rising to a certain point and then falling back, that's a resistance level. 2. Draw horizontal lines. To mark these levels, use the horizontal line tool on TradingView. Click on the Drawings menu on the left side of the screen, then select Horizontal Line. Click on the chart at the identified support or resistance level to place your line. Adjust the line to ensure it aligns perfectly with the price points you've identified. 3. Look for multiple touches. Remember, the more times a price level is touched without breaking, the stronger it is. This adds confidence to your support and resistance levels. 4. Use longer time frames. Switch to higher time frames like daily or weekly charts to see more reliable support and resistance levels. You can change the time frame from the top menu. 5. Check volume. Look at the volume bars at the bottom of your chart. High volume at support or resistance levels makes them stronger. You can enable the volume indicator from the Indicators menu. 6. Combine with other indicators. Use additional tools like moving averages or trend lines to confirm your levels. This adds another layer of verification to your analysis. And there you have it. You've successfully drawn support and resistance levels using TradingView. These levels will help you make better trading decisions by identifying potential buy and sell points. As we learned how to draw support and resistance levels using TradingView, now we're going to take it a step further and learn how to enter trades using these levels. We'll cover one buy or going long example, one sell example or going short, and one fake out example. Let's get started. First, let's look at how to enter a buy trade using support. Here's our support level. The price has bounced off this level multiple times, indicating strong support. We're looking for the price to come back to this level again. 1. Wait for the price to approach support. Watch as the price drops toward the support level. This is where we want to prepare for a potential buy. 2. Look for a bullish signal. Once the price is near support, look for a bullish signal to confirm the buy. This could be a candlestick pattern like a hammer or a bullish engulfing pattern, or a confirmation from an indicator like the RSI showing oversold conditions. 3. Enter the trade. Place your buy order just above the support level. Set your stop loss just below the support level to protect against a false breakout. Your target can be a recent resistance level or based on a risk-reward ratio. Great! You've entered a buy trade using support. Now let's look at a sell example. Now let's see how to enter a sell trade using resistance. Here's our resistance level. The price has repeatedly hit this level and then fallen back. We're looking for the price to come back to this level again. 1. Wait for the price to approach resistance. Watch as the price rises toward the resistance level. This is where we want to prepare for a potential sell. 2. Look for a bearish signal. Once the price is near resistance, look for a bearish signal to confirm the sell. This could be a candlestick pattern like a shooting star or a bearish engulfing pattern, or a confirmation from an indicator like the RSI showing overbought conditions. 3. Enter the trade. Place your sell order just below the resistance level. Set your stop loss just above the resistance level to protect against a false breakout. Your target can be a recent support level or based on a risk-reward ratio. Awesome! You've entered a sell trade using resistance. Now let's talk about fake outs and how to avoid them. Fake outs happen when the price appears to break through a support or resistance level, but then quickly reverses direction. Here's how to recognize and avoid them. In this example, the price breaks above the resistance level, making it look like a breakout. Many traders might enter a buy trade here thinking the price will continue to rise. 1. Wait for confirmation. Instead of entering the trade immediately, wait for a confirmation. This means waiting for the price to stay above the resistance level for a few candlesticks or for the next trading session to confirm the breakout. 2. Avoid premature entries. Avoid entering trades based on a single candlestick. Look for additional confirmation from volume or other indicators. In this example, the volume might be low, indicating a lack of strong buying interest. By waiting for confirmation and looking for additional signals, you can avoid getting caught in fake outs and make more reliable trading decisions. Thanks for watching. If you found this video helpful, Hit that like button, and don't forget to subscribe to SimpleTraderVIP for more trading tips and strategies. Hit the notification bell so you never miss an update, and remember to check the link to TradingView in the description below. Happy trading!